What's going on, traders? This is Jack with the Trading Tribe. Super excited to be back in the mix making videos. We have quite the schedule out for 2023, so excited to start getting back to cranking out more content. It's been a little bit of a break on my side. We've been going through quite a bit as a family, so I've been really just focusing on that and still trading quite a bit behind the scenes. But in terms of making content, right, it's been just a little tricky because of time. So excited to get back into it. We have a lot going on in the markets, and so I think we're going to have a lot of topics to cover in the next 12 or so months, and we have a lot on the roadmap for the Trading Tribe channel. So be sure to tune in, make sure to subscribe and hit that like button as well as leave me any comment on any subsequent videos. So excited to get into it today. Today we are actually going to cover trading on multiple time frames and just how important that is when trading, why it's important when trading. And I think this is a really, really big tip that would have helped me a lot kind of growing up as a trader. I think it made a lot of mistakes for me in kind of the early days of my journey. So excited to show kind of the value here. And we're going to look at natural gas really to point out some of the advantages to lining up multiple time frames as an example. So natural gas had actually just opened. The futures market opened about 20 minutes ago. It is 5:20 Central, and we can notice that natural gas has actually gapped up. So we're seeing kind of a sell-off right now, but natural gas actually has gapped up, which is actually good to see. This is really what we were expecting. And we're really going to look at today how you would even go about lining up multiple time frames for a trade. When we're trading in the markets, this is extremely important to line up really multiple confluences, we call it, where multiple time frames stack on top of one another to help give you that bias and give you that idea. So if we really zoom out and look at the whole year for natural gas, we'll kind of look at the daily chart first. And we'll notice natural gas, at least this front month contract, right, has been on an absolute tear. So ever since really last year, last December, right, it's been kind of the opposite of the stock market, which is funny, but we're making, higher highs constantly, higher lows constantly. And we had a really, really, really nice straight up rip pretty much where we had a clean breakout right around that 5.5 level. So we'll notice last March, right, we did end up breaking this level in end of March, and we really did never look back. So for quite a while until really June, we kind of topped out up here in the 9.5 range, 9 to 10 range, and we ended up pulling back, right? So just like always, when we're day trading, when we're swing trading, when we're investing, it's always just really good to see, from a year-long perspective, right, what the chart is actually doing, right? So in our case, natural gas is in a current uptrend. It came back to that extremely strong zone that I have kind of printed on my chart. This was kind of that breakout zone where we had multiple highs, break, and it really did a massive breakout retest. And we'll notice, right, it bounced off of that 200-day moving average pretty nicely as well. And then eventually, right, this last year, a couple months ago, natural gas had another rip, right, towards those highs, and we're on an uptrend, right? So it did a higher high, kind of a minimal one, but it did poke through 10 on that latest move. And now natural gas has really repeated history, right? It came kind of back to that zone, if you will, and we've seen another bounce. So volume's been extremely high on this front month, and buyers really stepped in right around where they did last time. And so in terms of the big picture, right, aligning timeframes is also nice to just understand, right, in terms of context, what a given stock or future is actually doing. So on the 1 year chart, right, our bias is uptrend, right? Natural gas is currently running and has been running all year, right? Sometimes gas can be as low as 2. So even when you're just looking at the numbers, right, it's already at 6. So it's double the lows pretty much, double or triple the lows, which can kind of show us that it's in an uptrend, but also the 1 year chart, really regardless of the contract month that you're looking at, is also an uptrend. If we looked at the stock market, right, it's pretty much the exact opposite, right? We've been making lower lows and lower highs, and we really want to start there, right, with that big picture. And what I like to do is kind of work my way down. So if I go now to maybe the 180-day chart and look at over the last 6 months what gas is doing. This is really just going to be a more zoomed in version of what we just looked at, but we'll notice the same thing, right? A little bit more detail and granularity on kind of exactly where the bounces have occurred. But we'll notice, right, this recent move has come down to that zone that we're really interested in and has bounced multiple times. It's bounced off the low of that zone, and then it's bounced off of that high area as well, which we would expect, right? We know buyers are there. They were there last time, and there was a lot of them there as it went all the way back up to 10. So we're really back at that level where these next few weeks are going to be really interesting, right? Because we're either going to come down and break this level, because you could argue this is a lower high that we're seeing actually, or buyers are going to step in again, and we just saw a major move right in last week's price action, and we could easily see it continue making higher highs if it takes out that 7.25 level that it printed last week. So really, really good to know, right? Even on the 180-day chart, we can get more granular and really look at what levels exactly on the lower time frames are mattering, right? So it was kind of downtrending these last couple months, and now we can see that a lot of buyers are starting to step in and turn around price right where we'd expect. If we go down to just last week, for example, this is also really nice because on my broker, at least with Thinkorswim, those levels on those other time frames actually drop down. So no matter what chart you're on, all of the levels are really synced across the board. So if I go back last week a little bit and even look at one of these day trading charts, we're looking at the 1 minute chart now, and we go back, we can actually see where it touched our level or got really close to touching our level. Technically, it missed it by 20 or so ticks. But in this case, right, natural gas had a downtrending day, right? It was making lower lows and lower highs constantly. Got pretty close to breaking that high of day a little bit earlier in the morning, but ended up failing and kind of causing a massive downtrend. There were a couple nice trades on this day actually. When it was downtrending, there was a pretty cool break of structure and a retest. So we traded this as of a breakout retest or a breakdown retest. More videos to come on the channel of how we've actually attacked the market on this down kind of trend over the last few months. But we'll really notice that, right, it came down to that long-term level almost to the penny, like we knew it could. And the main thing that you want to keep in mind with downtrends and aligning timeframes is to really just be careful with what you're actually doing, right? On this day, for example, it is downtrending, right? But we do want to be cognizant of those higher time frame levels, right? It's not a great area to short when we're down here, for example, because we don't know if this level is going to hold or if buyers are going to step in, and based on history, they have stepped in. Vice versa can occur, right? Buyers, because of this level being important, this actually is a good way to structure a buyer trade. So if we go into other time frames, even just the 5-day chart, we'll notice, right, it came down to that level multiple times, and then we've actually seen some pretty nice price action where a lot of buyers have brought it back above that zone. So aligning timeframes can be really valuable because your win rate, right, will go up quite a bit because you're going to be trading more with the trend, and it'll also help you out with being careful, right? In this case, when it's in the middle of that zone where we expect a bunch of buyers, it's a really easy way to catch yourself before you take kind of a stupid trade there. So really important tip to kind of take away from today, and I hope if you implement this with your trading, you see immediate benefits. Thanks, everybody. We'll be back with more videos in the future. And until then, trade safe.